us from? Are you, you know, coming from somewhere interesting, from your basement? I'm coming from the guest room / laundry hanging room, which is why I have a background. What is your energy level today? Are you excited, hanging in there, barely sit still? And maybe most interestingly, what are you hoping to learn in this workshop? I'll just let some of these chats come in so I can see. We got, I saw India go by. We got Maryland, Massachusetts, Ohio, backyard, very nice. San Francisco, my favorite. Wow, people from all over the world joining us today. That's incredible. And how about the excitement level? Do I have to calm you down, or do I have to amp you up? Fours, good. I'm gonna have to calm you down then, lower your expectations a little. A 3 and a 2. I don't even know what that means, Swindlin. All right, and finally, what do you want to learn in the workshop? Is there any particular topic? How to quantify impact measurements in healthcare, interesting. .3D printing ventures, very interesting. All right. Well, I can't keep up with everything, but I'll certainly have a look as during the breakout. So this topic area of measuring impact is, as most or all of you know, is incredibly broad. We can, you know, we could attack this topic area from a corporate perspective. We could attack it from an investor perspective, from an advocacy group or government perspective. There's all kinds of definitions in the space about what constitutes an impact metric or best practice in measuring impact. So we wanted to focus this question in a little bit, but at the same time provide some of the fundamental principles and characteristics of impact measurement that pretty much anyone could take away from this workshop. So that's my goal today, is to put it mostly in the context of a new or a small venture, particularly a venture that is interested in how it can demonstrate that it is doing good in the world, if you will, in an environmental and social way. But at the same time recognizing that your overall impact is going to be associated with your growth rate and your market penetration rate. But while we look at that particular case study of the entrepreneur in the new venture, I'm going to just talk in broad principles or broad swaths about what kind of characteristics and principles you might take away when you're thinking about what impact measurements you might want to create and use. So here's our rough order of topic. I'll spend maybe about 20 or so minutes at the beginning, giving you some definition and some characteristics and principles of an impact metric that are really applicable across fields of study. Then we're going to go into, as Ben said, breakout rooms. So we've got a lot of participants on today, so we'll have a lot of breakout rooms. We probably won't have a great deal of opportunity to consolidate and coalesce your discussions from those breakout rooms. So I really want you to engage when you're in the breakout rooms with each other, when you're in a small group. And we have provided a case study, a small venture out in California called Fire Clay Tile, which is a B Corporation, certified B Corporation. So they have a series of impact metrics that they have settled on. So we're gonna look at those metrics that Fire Clay Tile has produced, and we're going to assess them against the principles and characteristics that we present here in the first section. When we come back from the breakout rooms, because I'll be highlighting the importance of understanding your material issues if you are to define and develop good impact metrics. So I'm going to go very quickly, hopefully, and very sloppily on my iPad using to talk about materiality and how we can use that to develop better impact metrics. After that, we'll pause for some questions and answers, and then we'll finish off the workshop today with some tools and resources that I've been using a great deal in the context of corporate and investing impact, and hopefully they'll be useful for you as well. So that is our rough order of play today. I'm happy to pick up questions as we go. Ben is monitoring and watching, and I'll pause frequently in case there are particularly burning questions that come up as we go. All right. So first, we've got to level set a little bit. So I've pulled a definition from the Global Impact Investing Network. Let me just caveat this definition before I go any farther. This is a definition of impact measurement from the perspective of an investor. And so I've highlighted in red that impact metrics should ultimately deliver investment decision information, help learn and pivot when necessary, and strengthen the performance of the investor's portfolio and investment strategy. I've highlighted the investment decision information because that is what that stakeholder is bringing to the table. But the overall principle behind this is applicable to any stakeholder. That stakeholder wants you, the company or the organization, to identify and consider the positive and negative effects that your business has on people and the planet. That's really the basic definition, whether it's coming from an investor or an advocacy group or government. An impact metric is, how do we demonstrate those positive and negative effects on people and the planet? So that is the working definition that I'm going to be using today. And so you'll see a great deal of focus as I go through the impact assessments and metrics around society and environment as the impacts that we're trying to assess. So just as an example, there are thousands of examples out there. I pulled one from the investment management space. These are some impact metrics from Triodos, which is an investment management firm. So you can see if you squint hard, you can see what they've decided their social and environmental impacts are. The first one is their operational impact, and the way that they're measuring that is on the cultivated land area and sustainable cultivated land that they invest in. They've also got a social aspect around the number of employees that they hire and their temporary employees as well. And we're going to talk a lot about kind of the good, the bad, and the ugly of these impacts. But what you don't see here is their financial performance. That is not the impact metric that they're trying to get. They're trying to demonstrate that they are changing land use patterns. That's their environmental impact. And they're trying to demonstrate that they're creating social good through paying wages to people. That's their employee metric. So this is an example of what kind of impact metrics are out there. But we're going to have the chance to go into much more detail in other examples. So what is an impact metric? What are the characteristics of an impact metric? So I've outlined these as kind of common principles for what makes a good impact metric today. I'm going to walk through these, and then I have an example for an employee development investment on the next slide. So the first one, and probably the most fundamental one, even if you have not heard of the specific term input, output, or outcome, I'm sure that you have dealt with this concept in the past. An input metric is the measurement of what we have put into the investment or the initiative. So for example, if I want to build education communities, my input would be the amount of money that I invest into a new educational program, or the amount of hours that I allow my employees to volunteer, or the number of computers that I donate to the cause. These are all input metrics that I would put into the community in the hopes that I would create better education in that community. Output refers to the immediate output from that input. If I put money in order to get students to access technology better, the output would be how many students access technology better. So it is the immediate result of my input that I would then measure. the outcome is usually the thing that we really want to achieve. So I don't really just want students to access computers or technology. What I really want them to do is have better educational outcomes. I want them to do better in school, to get into more universities or better universities. I want them to get better jobs. I want them to create economic development in their community. There are outcomes that I am trying to achieve by increasing the exposure to education. So the first and maybe the most fundamental lesson in measuring impact is that the best measurement of impact is going to have metrics across that suite. Oop, I've lost my share. Thank you, Ben. Let me pull it back up. Can you, Ben, you're the host. Can you make sure that only the co-host can share? All right. So the fundamental lesson is that I want to have metrics across input, output, and outcome. And the best impact metric is going to be a suite of metrics that measure them across. Now, obviously, on the front side, the input side, it's easier to measure metrics on the input side. But it's more difficult as we go towards the outcome. But the value in terms of stakeholders and what they want from this is going to be much more on the outcome side, and that's why we need a suite of metrics. Second important principle is additionality, and I'll pause at the end of the slide before we go into the example in case there are questions, Ben. The additionality refers to how much my effort or my input into the initiative is creating the benefits that are observed. So for example, if I am investing in education through donating computers to children, and I see better economic development and reduced unemployment rates in the community 3 or 5 years out, how much of that benefit is attributable or accruable by to my efforts? So that's the additionality question. Multipliers refer to those people that will take my input and multiply it to a greater outcome or output. So for example, if I want to, if I educate children, those children could also take those resources and help their parents to also find better jobs. So the children could become the multiplier themselves. Transition and enablers refers to hurdles to the impact that I have to overcome. So the example I like to use is in wind energy. If I want to invest in wind energy, I could invest in better algorithms for predicting wind so that those who develop the wind can put those windmills or turbines in the right location. So if I can focus on the transition or enablers if I want to create that impact as well without going directly to the impact or the outcome that I'm trying to achieve. The data is a quite an obvious one. It can be very, very difficult to get the data that we need to measure impact, particularly for small ventures and entrepreneurs. It tends to be easy to get input data, but the outcome data can be quite difficult, and we're frequently going to have to use assumptions and calculations to figure that out. Net impact refers to any initiative or effort that I put in place is going to have impacts across a wide range of factors. So if I invest in wind energy, I might also have impacts on land use patterns. I might also have impacts on employment and employment rates. And if I really want to understand my impact overall, then I would look at those impacts across categories and trying to figure out a way to net across them. We'll talk about materiality and how to align metrics with multiple stakeholder expectations. But at the end of the day, when I'm trying to measure impact, what I'm really trying to do is respond to a stakeholder expectation. Impact measurements by itself is meaningless unless there is someone who is using that information to make judgments or decisions. And then finally, we'll also talk a little bit about measuring or aligning your metrics with some threshold of performance. For example, if I say that I've saved 1 million tons of carbon dioxide last year, you would justifiably ask, is that a lot? And the answer depends on what threshold I'm comparing my performance against. So we'll talk about where thresholds for environmental and social performance can be pulled from today. All right, so let me pause because I'm not tracking the chat. and ask Ben if there are any questions that are kind of imminent.
No recent questions. Folks want to make sure that the slides and recording will be available later on.
Okay.
But if you have questions as we continue to go, please ask those questions. I know a lot came through at the beginning as people were trying to share what they wanted to gain from the workshop. If any of those are more pressing and immediate questions, just feel free to re-ask those.
Okay. All right. So let me walk through an example of each of those criteria with this a case study of employment services. So the details here are pulled from a social impact bond in Mexico City from a few years ago. But I just wanted to pull out the principles as opposed to the details of the contract. So in this example, what we want to do in Mexico City is we want to invest in job services programs with the overall goal to reduce unemployment rates in the city. The reason we want to reduce unemployment rates is because the city or Mexico City is backing the investment, and that is the key metric that they're interested in watching. But there are other impact metrics that might be of interest as well. So in this case, what are the input, output, outcome metrics? The input metric is the amount of money invested. And to some degree, the number of programs that we create. So we put in X million dollars of investment for job creation services. We create a number of job clinics. We create a number of online job training services, and we create a platform to connect potential employees to potential employers in the city. Those are our input metrics. Our output metrics are the number of people that access those services, the number of clicks we get through the website, the number of people we log on our training events, et cetera. So really the number of people that access overall. But again, those are not the things that we really want to understand. What the City of Mexico wants to understand, what Mexico City wants to understand is whether the unemployment rate has gone down. That is the key metric that they're interested in. There are subsidiary outcome metrics as well that they're interested in, such as what is the tax revenue from sales in the city over time. We're interested in how does the ratio of wages to living wage change over time. We're interested in the number of new jobs created over time within the city. So there are a number of other outcome metrics that we'll be interested in tracking, but in this case, there's one key that we're trying to assess. Next principle is additionality. How much of that result, the unemployment rate, is because of the money that I've invested? So this is going to have a lot of factors embedded into it. So for example, I might, at the same time that I invested money, there might be a very large employer that walks into Mexico City and hires 3,000 people. Was that because of my efforts, or is that separate? Or it might be that bond rates for Mexico City go up at the same time, and so they have better access to credit, and they therefore can put more money into infrastructure investments. Excuse me. So there's going to be other factors that are also driving that outcome metric. And I want to try and figure out a way to track what is my potential additionality. And the most common way that I'm going to do that is by setting controls, to have a control population or a control city that I can look at and say, well, they've had roughly the same economic factors going on at that same time, but I had this investment in employment services. So how much of that, the difference between those two could potentially be attributable to my actions? So usually additionality is tested through some sort of a control population or test case. Third principle of multipliers. If I can employ one person, and if I can focus on that one person being an entrepreneur, then they can create additional jobs. So I might want to, in my inputs, to focus on particular types of employment that have the potential to create more jobs within the community, so that I have a multiplying effect with my investments. And if you can identify those multipliers, then you can shift and target your input metrics accordingly. The transition enablers, kind of in reference to what we were talking about before, I might include in my employment services, training and education services as an enabler for greater employment going forward. So rather than just focusing on connecting an employee to an employer, I might want to focus on education for key service sectors where I think that I'll have the most employment growth. The data question: how do we track along this pipeline of impacts that I might be interested in seeing? So I can certainly track the number of people that come in the door at the clinic, the number of people that access services. I can start to track the number of applications that go out. I can hopefully track the number of offers, track the wage ratio, et cetera. So I'm trying to get data along each of the steps from input to outcome to create a more full picture of the overall impact. For those of you who are in the investment world, you've heard of this. It's called mosaic theory for assessment. So we're just creating a mosaic of data along that pipeline from input to outcome to give ourselves a more full picture. What is the net impact? How do I measure across those categories? So I can measure jobs and types of jobs, the wages associated with those jobs. There's impacts on working conditions. There's impacts on worker safety, community economic development, water access, et cetera. All those can be impacted by more employment. And if I want to assess the full picture of impact, I would start to look at those secondary impacts as well. Aligning it with stakeholder expectations. In this case, there's a really clear stakeholder, which is the contract for the investment, and the contract specified unemployment rate as the key indicator. So in this case, we have a really clear metric that aligns to a stakeholder expectation. But there might very well be, unions or other job sites within the city that have other metrics that they'd be interested in, and it's worth keeping those in mind as you develop your metrics. And then finally, aligning a metric with a threshold of performance. I put the 0% unemployment with a question mark. Most economists would agree that 0% unemployment is not a great idea. But in theory, there's a threshold that if I want to reduce my unemployment as much as feasible in this case. Okay, so let's shift gears and try a little interaction with each other. So you will have had access to a Word document, and this information is on that Word document. So this is the Fire Clay Tile. It's a small company. You can read about what they do, but they produce tiles for kitchen remodels or other applications. They have about 50 employees now. And what I've done is I've provided their mission statement and a set of their impact metrics. So what I want you to do in your breakout groups is to answer a few questions. Let me see if I have the questions here. No. So I put the questions onto the Word document. But what I want you to do is to review that mission and the description of their metrics. And for each of the characteristics of a good impact metric that we just discussed, I want you to look at one or more of those metrics from Fire Clay Tile and talk about whether you think it meets those expectations. Like where does it do a good job against those characteristics, and where do you think they might improve?
Todd, before I break people into groups, we had a couple questions that might be helpful to answer.
Brilliant.
One question from Alec on the CBAE team is, are the terms that you gave in terms of impact, input and output universally understood? Do investors in different reporting companies use them differently? And do they track to particular tools of financial analysis?
So the terminology varies a fair bit, but the premise of input, output, outcome is pretty well understood, and I would say fairly universal at this point. But the exact terms that might be used in a particular context will likely vary. But the premise of what did I put into it, what is the immediate output from that, and then what is the overall outcome that I'm trying to achieve. Those are fairly universal principles.
We also got a question on the cost of data collection, and do you have any insight on how to balance the cost of collecting data with the need to demonstrate impact, particularly in an NGO or public sector case when there's not a lot of funding to begin with?
Yeah, that's a great one to ask as we go into fire, clay, tile, because this is a small company that probably doesn't have a lot of excess margin to invest, and I think you'll see that reflected in their metrics that they've pulled. But for a small venture, the rule of thumb is that you will have it's fairly cost effective to measure input metrics. But for output and outcome metrics, you're usually going to rely on literature and calculations or assumptions to get those numbers. I'll give it a quick example. You can fairly easily measure your electricity, for example. The output of that would be a calculation of greenhouse gas emissions, scope 2, and then the outcome would be comparing your greenhouse gas emissions reduction efforts against a scenario, for example, to show that you are in line with the overall goals of the Earth to reduce greenhouse gases. So the second one is a calculation. The third one is just a comparison against literature. And that's going to be fairly typical. Measure, calculate, literature.
Great. With that, I'm gonna split everyone into breakout groups. So you're gonna have 10 minutes to discuss this particular case in your breakout sessions. Please also make sure to just do quick introductions of who's on the line. You'll be about 3 or 4 people in each breakout group. So good luck with the session, and we'll see you back here in about 10 minutes. Those of you who are here with us in the main room and maybe have just joined, we had everyone in breakout rooms discussing a particular case of indicators in action, and now we're bringing everyone back. So you'll be able to at least follow the chat to see some of what came out of those breakout groups, and then we're gonna move on to materiality. Welcome back, folks who are starting to come in from the breakout rooms. Please just stop your video. For those who didn't hear the beginning, if you put your video and your microphone on mute, and then also find the hide non-video participants option. And that's if you've got the gallery view and you see all those different screens, there's 3 dots in the display of anyone who doesn't have their video up. And you click on those 3 dots, scroll down, hide non-video participants. And then for the rest, you'll just see Todd as he's presenting, and maybe me as I occasionally chime in. But it looks like we have everybody just about back. So welcome back, everyone. Again, if you're just getting here, please hide your video again. Thanks so much for bearing with those breakout sessions. It's great to be able to try a mix between a presentation and an interactive format. So we appreciate you being game for that exercise. And I'm going to now turn it back over to Todd to resume the presentation.
All right, make sure I'm not muted. Yep, okay. So in the absence of having 30 breakout rooms I'll try to share at the same time, I thought we could just, or Ben suggested we could just have a kind of a chat feedback. So I just drafted a couple of questions for you to put an answer into the chat. First one I think is an easy question, maybe a quiz question. In your opinion, do you think the metrics that you were just looking at, were they predominantly input, output, or outcome metrics? And then the second question is, who do you think they were trying to convince? Who do you think those metrics were targeted at? I've given some potential answers, but you might have a totally different one. Lots of input, output, customers, employees. Recruits. Yeah. So let's say the consensus is that it's input and output, that they had very few outcome metrics, which makes sense, right? Because outcome metrics are more difficult, they're more costly to pull. They require more information and assumption, and particularly for a small company, that's going to make a lot of sense. And let's also assume the consensus is that they're targeting their customers and employees. So my next question for the chat is, do you think they succeeded? Are those input or output metrics going to convince their customers, employees that this is a good company, that they are creating beneficial impact? Lots of yeses, some 50-50, mostly yes. Yeah, all right. So I think again, I'll just go with consensus. The consensus is yes or mostly yes, or partly yes anyway. Maybe you said 50% or greater. So this is it gets back to the premise of impact measurement is that we're trying to paint a picture with our metrics as opposed to trying to answer a question with our metrics. So Fireside Chat, Fire Clay Tile, they were, it's a small company. They don't have a huge investor base that they're trying to convince. What they're likely fighting to do or trying to do is to convince themselves that they are creating beneficial impact. I'm sure there's some aspect of their ownership that wants to feel confident that they are creating good in the world, and that they are mission aligned. And then probably a lot of it is about reaching out to customers. They've gone to the effort to be a B Corp, so they've gone to the work to get certified. There's a stamp, so it's not just about their own employees. It is about people who care about that stamp, which is going to be a lot of customers. So they don't have to, in that case, demonstrate how much of climate change they have solved in the world, or the percentage of employable women in their area that they have employed. This is not, they don't need to address the threshold questions. What they need to do is they need to have metrics that boost their reputation in the marketplace where they're working. And that is kind of the fundamental message of impact metrics is we only need to create the story that is meaningful and compelling to those people that we're trying to influence or convince. So we're not always going to see impact metrics going out to the outcome. In other circumstances, if you're a very large corporation, if you're investing a great deal of money into your social investments or your community economic development plans, it's probably not going to be sufficient for those companies to just say, we put in X million dollars into this effort, or we have we've given 1,000 volunteer hours over the last 2 years in this effort. Those input metrics might not be sufficient in those cases. So the circumstances of the picture that we draw are going to be different across the board. So this is a segue into our next section, which is if I'm just trying to paint a picture, then I really need to understand who is the audience for the picture. And I need to understand why that audience cares about impact metrics in general. And the only real way to answer that question is to undertake a materiality assessment. Now, materiality is a large, it's a topic of study and interest. I'm not going to address even a marginal bit of it. I just want to introduce you to the idea for those of you who are not familiar with materiality. And I'm going to talk about it specifically in the context of stakeholder materiality, which means how do we assess materiality issues based on multiple stakeholder perspectives. So bear with me for just a second while I change over to my iPad so that I can draw. And there it is. All right, so hopefully everyone can see this now. Let me know if you can't, Ben. So, yep, okay, everyone can see it. All right, so I'm going to present materiality as this basic concept. We want to understand whether an environmental or social impact is significant on two axes. The first axis I'm going to call the internal axis. So this is this issue, whatever the issue is, it's my greenhouse gas emissions, it's the diversity of my board of directors, whatever the issue is, I want to understand whether it's important to my company. So what do companies care about? They care about things like profitability, business continuity, compliance with regulation, profit margins, revenue, leverage, etc. All the traditional things you'd see on a balance sheet for a company. And then I also want to understand whether an issue is important to my external audiences, which would also be my stakeholders. So if I'm going to just separate the question based on these two axes, and I'm going to try and measure particular issues independent on these two axes. So let's take example, I'll call it A. We'll call this greenhouse gas emissions. So how much tons of carbon dioxide equivalent do I put out, scope 1, into the atmosphere? And for my company, I might assess, well, internally, greenhouse gas emissions are a measure of cost efficiency, but that's really a pretty small aspect of my business and how profitable I am. I'm not regulated, so it's low compliance. So I'm going to say that greenhouse gas emissions are fairly low on the internal axis. But when I look at external stakeholders, they're incredibly interested in my greenhouse gas emissions. I'm a consumer products brand. People are buying my product because, in part because how they see me as a responsible operator. So I might say that greenhouse gases on the external axis are quite important. And so I would plot greenhouse gases right there. Right, so that makes sense. So I'm going to test all of these different impacts that I might have against these two axes. And so I'll end up with this list of and plot of different issues at different points on this axis in a very simplistic manner. There's F. So this might be water use here, and this might be human rights, and this might be health and safety. Again, all very hypothetical, just to show you how the plot works. So this does something for me already. What it tells me is that I know what messages I need to convey. What I need to convey is everything from this point forward, and I'll use a little red to do this, everything up here, these are things that stakeholders care about, right? It's all high on that external stakeholder axis. So I need to create narratives around those issues for my stakeholders. This is where my impact metrics need to run. So I need to have a story around human rights and a story around water and a story around greenhouse gas emissions. Just erase some of that. What else can I tell from this? What I can also tell is that I know that, say, the water sitting up here at point E, I know it was high on the external stakeholder axis, but I also know why it was high on that stakeholder axis. I know that there were some stakeholders that looked at water and said, that is an issue that I care about. And what I really care about for that company was something. Maybe they use too much water. Maybe they're in the neighborhood or in my community and I'm worried that they're using too much water out of the river. Maybe I think they're polluting the watershed. There is a reason that I as a stakeholder care about that. And if I know why a stakeholder cares about an issue, then I know what the metric is that I need to measure. Let me use the greenhouse gas as an example. I can measure all kinds of things or impacts from greenhouse gases. I can measure how much I emit, scope 1. I can measure my electricity use. I can measure my scope 3 emissions. I can measure my leadership score on the CDP, the Carbon Disclosure Project. I can measure awards that I might get on, responsible climate company. But the right metric to measure my impact is the one that speaks to the reason that stakeholders care about it. So if as a regulator that cares about my greenhouse gases, then the appropriate impact metric is the one that the regulator is asking me to measure. In this case, say scope 1 emissions. If it is an investor that cares about greenhouse gas emissions, they might be more interested in the financial implications of climate risk on my business. If it's a customer, they might be more interested in my CDP leadership index. So depending on which stakeholder it is, they're going to dictate what is the best indicator that I should be sharing and metric that I should be measuring. So we can tailor our input, output, and outcome metrics based on the nature of the indicator, the nature of the issue, and why people care about it. So I don't have to measure everything to create a good picture. I just have to paint the picture around the things that people really care about. So this helps us a great deal when we're talking about impact metrics, because it is not useful to try and make a comprehensive picture of impact metrics. It is useful to try and create a tailored picture of impact metrics. So whenever companies or investors come to me to ask about what are the best impact metrics that I should be measuring, my answer is always who cares and why they care, and then we can define what your best impact metrics are. So just a quick reflection before I go on, and I'm going to pause for questions here. So Ben, if you have a look and see what questions are coming up, but a quick reflection back on the fire clay tile is, we said that they were being, we thought our consensus was they're being responsive to employee and customer expectations. And I just want to reflect on that a little bit by asking in a slightly different way. What does a customer of a tile manufacturer really want when it comes to social and environmental impact? And now, do you think that those metrics, they're here again, do those metrics speak to what customers and employees really care about for a tile manufacturer? It can be the same answer. I'm not saying that they did a bad job. I just want to reflect a little bit, more on the nuance here about do we think that they're responsive to those specific expectations? You can put it in the chat, by the way. And I'm going to reflect just a little bit before we go to questions. So here's my quick reflection before you open it up for questions. My reflection is that on the employee side, very much it does. These are great metrics for employees. Things like 100% of employees are granted equity. That's a great metric for employees. Living wage paid to all employees. It's a really good metric for employees because it speaks exactly to what employees might be interested in. Not only that, but some employees, an increasing number of employees, want to work for what they think of as a responsible company. So then we look at other aspects that are beyond just the employment package. Like, is it a diverse company? Do they think about the environmental impact of their products? Yes, they do. There's a couple of metrics. So there are, it's a really good set of metrics given that audience. If we expanded it to, say, customers, it might not be quite as, or they might not be quite as good, right? They've got the recycled materials, they've got products manufactured in North America. I presume that's responsive to their customer base. But there are probably a lot of other metrics that customers might be interested in. They might be interested in, where did the stuff come from? Does it have toxic materials in it? Should I be concerned about safety issues, right? There might be other metrics that are more responsive to customers. But when I read this, first place I went to was employees as their target audience, and that they have painted a very good picture of their impact for employees. All right, so Ben, sorry, questions? Are there questions?
Yeah, we had a question from John that was, how does your approach to materiality track with SASB KPIs? And just to unpack that acronym soup for those who might not be aware, SASB is the Sustainable Accounting Standards Bureau, and KPIs are key performance indicators.
Oh, this is a big rabbit hole, John. So I'm not going to go too far down it. So SASB and GRI. No, sorry. Let me back up. there are various reporting frameworks out there like SASB and GRI, which list indicators, meaning issue areas that they consider to be material. The underlying materiality, how do they decide what indicators were likely to be material? The process was slightly different between them and others. So SASB has said these are indicators that are material to investors, so that we believe are material to investors. And the way they assessed that was they went and they asked investors, and they got a consensus opinion on what investors cared about for each sector, and then they listed those out in the standard. GRI said, same thing, we're going to assess materiality through consensus, but they looked at multiple stakeholders across wide ranges, not just investors. Shockingly, maybe not shockingly, the two standards actually came to a fairly similar set of standards. The GRI is broader because they have broader set of stakeholders. But the premise of how to assess materiality by pulling stakeholder opinion out separate from the company is consistent between pretty much all these standards. SASB pulls investor opinion out separate from the company and essentially did that same axis. GRI pulls multiple stakeholders out from the interests of the company and assessed it that way. So the idea of that there's an internal axis and an external axis is consistent with SASB and any other framework.
So our next question is a good follow-up to that from Kate. Can you share some good tools and resources that one can use to conduct a robust materiality assessment for different stakeholder groups?
There's dozens and dozens of tools. I'll point you to GRI because it's the oldest of the group, and it's probably the broadest of the group. They have in the GRI standard, they have instructions on how to undertake materiality, and they have principles and quality characteristics for materiality. The second place I'll point you to is the AA 1000 SES, Stakeholder Engagement Standard, which also has detailed guidelines on how to undertake a stakeholder-based materiality. And then the final place I'll point you to, for those of you who are kind of more on the financial reporting side and financial implications of environmental and social aspects, I'll point you to the World Business Council for Sustainable Development, WBCSD, and COSO, the committee of the organizing sponsors of the Treadway Commission. I think I've got that wrong, but it's COSO. They put out a guideline in first part of 2018 that is an update to the enterprise risk management standard that COSO issues and tells you how to integrate environmental and social aspects into your enterprise risk management assessment, which is essentially an enterprise materiality process. So I'll point you to those three as some good tools for materiality instructions.
Another question, this one is from Bruno. What do you think about using the SDGs for impact measurement? That's the Sustainable Development Goals.
So we're going to get there. We're going to talk about that as part of the context question when we go into tools and frameworks that might be useful, which is our next stage. So maybe I'll push that for just a little bit. But the quick answer is that the SDGs provides 100 some odd indicators, and it's a great way for you to measure your impact metrics against a context, which I'd call a social norm in this case. So you can say, oh, does my impact picture that I'm creating, does it speak to the things that society cares about? And what does society care about? It's been pretty well encapsulated by the Sustainable Development Goals. So it's very useful in that sense. But we'll walk into that a little bit.
Great. Lindsay asks, what investment benchmarks are there to use to evaluate companies relative to each other?
I'm sorry, repeat that one. What investment benchmarks? Yeah,
what would investors use to evaluate companies relative to one another?
Oh, so it depends on kind of investor you are. There's lots of different investment strategies. Let's say that, I'll just pick two examples. Say I'm an ESG integrator type investor. So I'm interested in what kind of environmental, social governance facts or factors can influence the risk of my investment. but this is kind of mainstream investor strategy for environmental and social governance aspects. For those investors, they pretty much fall into one of two categories. Either they buy the assessment from a third party or they do the due diligence themselves. So the big providers of ESG risk assessments for an ESG integration strategy are MSCI, Sustainalytics, Morningstar, Thomson Reuters, which is now called, I think, Refinitiv is the service. So there are some very big data houses that that are doing that analysis for you, and you can purchase their data and the scores, and they'll churn out a super interesting risk assessment against environmental and social factors for you for any company, any listed company. The other approach for investors is to do your own due diligence on ESG integration. This is an area that I work in a fair bit, probably fair to say. And the most productive way to assess ESG risk, if you're doing your own due diligence, is to look specifically at the management controls and the governance structures to mitigate those risks, as opposed to focusing too much on past performance. So if you're doing your own due diligence as an investor on ESG risk, focus on whether that company is going to be able to mitigate the risk once it occurs over their past performance.
Our next question goes back to the topic of materiality. If you agree with a stakeholder that a certain topic is material, but you don't agree with a particular metric that a stakeholder is trying to measure, is there a way to shift the conversation to a metric that you as the measurer considers more valuable?
Yeah, there's three big levers on companies today. It depends on what kind of a stakeholder you are. So one big lever is for investors. Investors can shift that conversation through, the quarterly call or through even a shareholder resolution if you can get enough votes behind you. And that happens all the time. We see a lot of shareholder resolutions right now on climate change disclosure. And the bulk of them today are asking companies to stop reporting just their greenhouse gas emissions and start reporting the financial risks associated with climate change. So that is a shift in the metrics that investors in particular are interested in. The second big lever is around social movement or consumer movement. And those, the lever there is, you can write, you can boycott, you can start a social media campaign. There's a variety of ways that you can try and influence companies to move. The reality is that it usually requires a significant amount of momentum to do it. But it's always possible. It kind of depends on what metric you're after. And then the third big lever is regulation, to get your local regulator or politician to help you move put something into writing and onto the books. So really, it's a vague answer, but it depends on what kind of a stakeholder you are and what you're looking for from companies.
So we had someone put the COSO report into the chat here.
Thank you.
We'll also follow up with the slides here, recording, and any additional resources that have come up that might be useful. So keep an eye out if you've registered for an email next week with that follow-up information. Todd, do you have time for a couple more questions?
I do. I've got 20 minutes, and I want to have at least 10 to give you some tools and resources.
All right. So Shuran asks, is there a model to use to measure that outcome or output, or does that model need to be built by hand from scratch?
Well, because the outcome is so bespoke, right? It's bespoke to the company and the thing that you're trying to achieve, and also the stakeholders that you're trying to convince or communicate with. There's no frameworks or standards for outcome metrics. There are, however, templates, and there's a lot of templates. There's templates like there's bond issuances, there's environmental impact and social impact bonds, which are templates of outcome metrics and how you might codify those. There is the Global Impact Investor Network, which is essentially a a menu of output metrics that you might consider, and I'll run through a few of these. There's metrics that are social norms. So we'll talk about the Sustainable Development Goals. So depending on where we are on that spectrum, there's either more codified metrics, or there's more principle-based, what people are interested in type indicators. Maybe that'll become more clear as we walk through some of the tools and resources that are out there.
One more question currently in the chat. How do you relate ESG and impact measurement? Are they the same concept or not, or why?
No. So these get conflated a lot. And by the way, I'm not the global authority to decide this. There's continuing discussion, debate, but I'll give you my context, which is there's this very big umbrella of social and environmental aspects or issues that society and companies are trying to figure out and address. Underneath that, and let's take that in the investor construct. So there's a wide variety of investment tools and strategies to address environmental and social aspects. But impact is just one part of that umbrella. So as an investor, for example, I might be interested in ESG risks to financial performance. So the impact that I am interested in is financial performance. And whether you emitted greenhouse gases or you emitted polluted water, that's okay to understand. But what I want to know is whether that creates financial impact. Impact, the way that we're discussing it today, is what is the environmental and social environmental and social impacts that impact on the community or the environment. So here we're trying to understand what is the impact on something other than the company as our measurement. So to me, this is one pillar underneath that much broader umbrella. So that's the way I'm defining it. But there are definitely sectors of the economy that kind of believe that ESG and sustainability and impact are all more or less the same thing. That's just not the way that I organize my thinking.
Got it. Thanks, Todd. That's it for the questions for now. So why don't you go into the final section? If anyone else has questions, we'll try to address some of those questions at the very end.
Okay, so we're going to talk about tools and resources. I'll do this hopefully for about 10 minutes, and we'll have time for some last-minute questions before we break. So I've organized this into two categories. One is tools and frameworks out there that can help you establish context for your impact metrics. So we talked about, if I save 1 million tons of greenhouse gas, is that enough? So there's lots and lots of these out there, but I'm just going to point to a few. I'm going to point to the Sustainable Development Goals, which is a kind of a globally agreed, if you will, set of social norms around what beneficial impacts are we trying to achieve. The planetary boundaries is a scientific-based norm around what are the acceptable amount of environmental impacts that we can tolerate as a planet. And then the Science-Based Targets Initiative and a subset of context-based targets, which are focused primarily around climate change and how much do we need to reduce our climate change or our greenhouse gas emissions in order to reach the 1.5 or 2 degree scenarios. So I'll introduce each of these really briefly. Obviously, you can go have a look. They're all online, free resources, and there's a lot of reading to be done for each one. So probably everyone on the call is familiar with the Sustainable Development Goals. There's 17 of them. They're issued by the United Nations a couple of years ago, and they address social and environmental issues as well as economic development issues that we as a planet would like to achieve. Everything from climate change and biodiversity on land and water to social issues like hunger, poverty, and health. Under each of these 17 goals, there is a set of indicators, so 232 of them. So how is this useful to the impact measurer in your life? Again, if I want to paint that picture of, that I am a responsible company, that I'm having a beneficial impact on society and the environment, then one way to do that is to determine my impact measurements, but then index them or key them to this type of a social norm. So for example, if I demonstrate that that I pay a fair wage to all of my employees, from the fire, tile, clay, how does that link to what society cares about? Well, there is a sustainable development goal associated with that around economic development and quality of life. So I can link that, and a lot of companies will do this. They'll draft their impact metrics, and then they'll put a little color-coded box next to it to show this is a sustainable development goal that we are addressing. The other way that this can be useful is if you're not sure what impacts you want to measure or you want to focus on, this is kind of a to-go menu for you to scan through and say, oh yeah, we do that and we do that, and we've got some impact there. So you can kind of pick and choose in case you're not sure what your impacts are. But really, this is like a true north bearing. So rather than saying we do stuff, you can say we do stuff that is aligned with what society wants. So it's kind of a mapping exercise, I think, mostly. For those of you who are interested, there are dashboards around what the key needs are under each of the Sustainable Development Goals. So this one came out in 2017. There's a more recent version of this. You can read these reports on performance against the Sustainable Development Goals, and then you can key to, even further key your impact to say, what's really needed today is climate action. It's number 13. It's way down there. We're not doing a great job on it. So that's where we're going to focus our impact measurements on, if you want to really key against a social norm. There are a number of companies and organizations that are producing scorecards against the Sustainable Development Goals from the perspective of different sectors of the economy. So there's a sustainability. You see, they've got the evaluating progress against the SDGs report, which is mostly corporate focused. There's the BREEAM, which is mostly real estate and infrastructure focused. WBCSD has their Action 2020 list, which is mostly corporate focused. And the GIN has they're achieving the Sustainable Development Goals, which is mostly impact investing and investor focused. So there's all kinds of reports out there that assess our commitment and progress against the Sustainable Development Goals. Really useful for you if you want to understand the threshold that you're working towards. Also very useful for you if you're looking for the type of metrics that are being reported by others and compiled into these reports. Second big threshold tool is the planetary boundary, and hopefully most of you have heard of this. This comes out of the Stockholm Resilience Institute. They compile scientific studies and scientific opinion on which planetary systems are most under threat. So you can see if you're looking for the highest priority threats right now, genetic diversity or loss thereof is one. Phosphorus and nitrogen release into water bodies is a second. We're in increasing trouble with regard to climate change, land use systems. But if you're going to focus on stratospheric ozone depletion, you've got a lot of leeway before we start to see significant effects. And just to kind of bear that out, this is for each of these risk zones, the planetary boundaries plots out, where are we today? What happens when we go into a high risk zone? How do we get back to a safe zone, et cetera? So it's very useful for those who are looking for context for your environmental impact indicators in particular. And then the third tool before we shift gears a little bit is the science-based targets. Again, very focused on climate change. But what the SBTI is doing is it's trying to take the 1.5 and 2 degree scenarios and say, to achieve those climate scenarios, how much do we have to reduce emissions? And then translate that into the targets, the emission targets for a specific company. They use a variety of tools to do that. You can set your targets based on absolute targets, sector-based allocation, or economic allocation. but it's really a how-to guide for companies that are interested in going from that output to the outcome, by understanding your emissions, in this case, your greenhouse gas emissions, against a threshold. And they just give 3 options on how you would set that threshold. So I encourage you, go have a look. There's even a video to understand it fairly simply. And then a subset of that target setting for impact metrics is context-based targets. So this is, it takes the science-based targets, which are based on a natural science. In this case, the reality of a 1.5 or 2 degree scenario, and they overlay an ethics based target, which focus around either norms of fairness or justice or integrity of the company. And then you can define, based on those 2 principles of what is a responsible target, you can define what is it that we should be focusing on. It's one thing to say, I'm going to reduce my emissions to 0, but in so doing, by reducing my emissions to 0, I meet a science-based target, but am I also meeting the expectations of, fairness and justice if I shut down operations, in this area, or whatever mechanisms I might use to do that. So it's more of a balanced approach to understanding and setting targets. So all worth having a look at. And I'll pause here in just 2 minutes, I think. So the second part, so those were ways to understand your context of your impact metrics. The second here is kind of off-the-shelf metrics and tools that are out there now. Again, there's hundreds. I just want to point to a few of them. So the WBCSD Action 2020 is a very useful tool for those of you who are looking at impact metrics, because they provide a list of the most material factors that companies need to address today and what kind of impacts are associated with each. If you are an investor, or if you have investors that are interested in your impact, then the GIN and their database IRIS Plus is a useful tool. Just from my personal experience, because I work with these folks, the Prime Coalition is a great tool if you're looking at greenhouse gas reduction potential for a new venture or a small venture. And I'll describe the Crane tool briefly. And then there's all kinds of certification standards that provide impact metrics as part of the certification. And I'll just introduce you really quickly to the B Corps, which is one of the more common ones. All right, so Action 2020, very quickly. The WBCSD developed a Vision 2050. Where do we have to get to by 2050? And in order to get there, here are the short-term actions that need to be achieved. It was the actions that need to be achieved by 2020. Now it's the actions that need to be initiated in 2020, because we've lost a few years. This is what that looks like. For each one of these aspects, they will pull out the business solutions that are relevant to it, the stakeholders that are interested in it, what those stakeholders care about, and therefore how you would monitor and evaluate in each of those impact areas. So it's a useful tool. It's also very concise and well done. GIN has produced the IRIS database. I think you have to pay now, or at least register to see the database. It might still be free, but you might have to give your information to GIN. But it is a list of impact metrics that are relevant to investors. If you don't feel like giving your information or registering, you can still access some of the reports that GIN puts out, which I've given. This is straight off their webpage. All very interesting reading, and you can derive relevant impact metrics from those reports by reading through them. I mentioned the Prime Coalition. This is a nonprofit venture capital fund, which uses philanthropic seed capital to scale investments into early stage ventures that have climate benefit. And they now have a Crane tool, which is there's a beta. You can sign up as a beta user now, but when you sign up, the tool allows you to input some basics about your company or your venture, and it will then calculate your greenhouse gas reduction potential based on your market penetration, the type of technology that you have, et cetera. And you can dive into the equations that underlie that tool so that you can understand how those calculations are being done. The goal of this is that new ventures would plug their information into this tool, and that would then be used by potential investors to assess whether they get a significant greenhouse gas reduction bang for their buck. And the last one that I'll point to is the B Corps, which is the lower bullet here. This is a labeling and certification scheme. If you want to become a B Corps, you would apply. They send you a questionnaire. You fill the questionnaire out, pay a small fee depending on what kind of company you are, and then they'll send out an auditor to verify your performance. And if you pass, I think 70 or 80% of you get 70 or 80% of the score. They give you the B Corps stamp, and then you can put it into your advertising, your website, et cetera, to show that you are considering environmental and social impacts. I'll leave this one up, but I won't talk about it. Rather, I'll stop there and take any last questions that we have.
Thanks, Todd. We've got a few questions here. I'm getting a couple questions on kind of how do you turn these into action? How do you take things like UN standards and create more of an actionable roadmap?
So there's let's outline a basic process. The answer here is that there is no off-the-shelf tool to do this, right? Because we are creating this mosaic picture of your impact. And there's no kind of this is not like we have a GRI to say, here's your 109 metrics to choose from, or indicators to choose from, pick the ones that you like, and then move on. You have to pull this together yourself. So step one is looking at the various menus of impact metrics that are out there. So you could look at the GIN tool, you could look at the Action 2020 tool, you could look at the Prime Coalition or the B Corps set of metrics, and you have a menu of impact metrics that you can pick and choose from. Then you undertake your materiality assessment. It can be really quick and easy, but you need to understand who are your stakeholders and why do they care about these issues. Now you've got your kind of benchmark information and you've got your materiality assessment. The next stage is to pick and choose the metrics that you think are the most valuable to you as a company based on that stakeholder perception. It might be that you can use off the shelf, the ones off the shelf in your benchmark. It might be that you have to create some new ones because your stakeholders are expecting something a little different. So you come to a consensus in your company of, these are the metrics that I think I want to use. And then the third is to then go out and collect the data and plot it against the input-output outcome framework and see where you have gaps. You know, have we painted a complete picture? Do we need more outcome metrics? Do you have the data for the input metrics? So see if you've got a complete picture, and then you're ready to communicate, presuming that you're actually creating the impact. Don't set metrics unless you're ready to perform against them. Maybe that's a good message to say.
Right at 2 p.m., people are starting to drop off. And one question I did want to bring up before that, as folks though are starting to drop off, I want to thank them for having attended and for joining this conversation. We'll follow up to everyone who registered with some resources, the slide deck, and the recording. And just to wrap up, because we're doing this virtually, because we've had such a wave of interest of people joining via Zoom, the health and economic crisis is on people's minds. And Bruno asked, do you think that businesses are still going to focus on impact metrics as much in the midst of this health and economic crisis, especially compared to a time like 2015 when the SDGs came out?
That's such a good question. There's so many conversations going on now about what the new, what business and investing will look like, in the next year to 5 years. And it depends who you are. I'm an optimist. One of the key takeaways I've had is that businesses have, we've exposed our lack of resilience planning against very global shocks to the economic system. And there are a few other very global shocks to the economic system that are sitting on the horizon, which are climate change, water, poverty, socioeconomic inequality, diversity. And if there is a lesson coming out of this, it's going to be that we need to understand our impact in those areas better than we do now. Otherwise, we're not resilient. So that is my optimistic take, is that there are some areas of impact that are going to be more important for businesses to understand. And then my other point here is that the government is now, across the world, the government now has a much heavier hand on the tiller of the economy, given the stimulus that's going around. And so the government's going to have a lot of leeway to define how we're going to come out of this economic slump. And my guess is that a lot of governments are going to point to, equality issues and clean energy issues as the way to an infrastructure, green infrastructure as the ways to build the economies back up. And businesses would do well to know their impact in those areas as the government leans on that tiller.
Well, I think that is a perfect optimistic note to end our session. Sorry we couldn't get to all the questions here. Feel free to reach out to either of us to follow up. Thank you all for joining this session. It was really exciting to see such an enthusiastic response to this workshop. And I will leave you all to your afternoons. Stay well.
Thank you, everyone.
Take care, everyone.